Welcome to the Daily Market Recap. Today is Monday, June 8th, 2026. Talk about a Monday bounce back after getting absolutely pummeled on Friday and snapping a spectacular 9-week winning streak. Wall Street caught its breath today. The main indexes finished in the green as investors engaged in some classic buy-the-dip behavior, shrugging off the initial shock of last week's blistering jobs data. We're not completely out of the woods, but today was a nice relief valve. Tech and fintech sectors did the heavy lifting today. Fintech stalwarts rallied hard on massive retail and institutional accumulation. On the flip side, mega-cap giants like Microsoft and Meta acted as party poopers, keeping the Dow slightly dragged down, while semiconductor powerhouses fought to stabilize after Friday's brutal tech wreck. So where does the vibe check stand? CNN's fear-greed index has swung hard into extreme fear, sitting at a frosty 24. Friday's massive volatility spike sent options pricing through the roof, pushing retail investors into panic mode, which historically often primes the market for a bounce. First up, the jobs report hangover is real. Friday's non-farm payrolls absolutely exploded, adding 172,000 jobs versus the 85,000 expected. With massive upward revisions to previous months, the labor market is screaming hot. The big twist? Traders are now whispering about a potential Fed interest rate hike later this year instead of a cut. Talk about a plot twist. Next, geopolitical wildcards are back. Over the weekend, military exchanges between Iran and Israel sent energy markets into an absolute frenzy. Brent crude surged past $97 per barrel, while equities tried to look past the smoke today. Any prolonged disruption to the Strait of Hormuz could reignite sticky inflation and put central banks in a vice grip. And finally, the AI arms race just got an $80 billion price tag. Alphabet dropped a bombshell planning a massive equity issuance to fund its next generation of artificial intelligence capital expenditures. They are building a fortress of data centers to maintain dominance, proving that the tech giants are willing to spend whatever it takes to win the AI crown. All right, let's look at the daily scoreboard and see who won the day and who got absolutely left behind in the dust. Leading the charge today, we saw massive green candles for INTC, PG, IBKR, HOOD. On the flip side, getting a lump of coal in their portfolios were MATA, GS, CAT, AMZN. Let's look at the charts. The SPY closed nicely around 7,405. If the bulls want to keep this train moving, they need to defend the immediate support zone between 7,350 and 7,400. To truly resume the macro uptrend, we need to clear overhead resistance at its previous peak of 7,600. The tech-heavy QQQ bounced back to close near 25,930 after its terrifying 5% drop on Friday. The immediate line in the sand for the bulls is keeping price action above the 23.6% Fibonacci retracement support around 25,500. Resistance sits tightly at the 26,200 pivot level. Small caps flexed some muscle today. The IWM finished strong at 2,855. It's building a solid foundation above the 2,800 psychological support floor. If this small cap rotation holds, expect a retest of major resistance at 2,900 very soon. Crypto is staging a beautiful comeback after getting absolutely throttled last week. Bitcoin briefly broke below $60,000 on Friday, but aggressively bounced back today to sit just under $64,000. The key level to watch is immediate resistance at $65,000. If we break that, the bears are cooked. Ethereum is holding steady around $1,666. Over the weekend, ETH beautifully defended its critical support floor at $1,524. The next major target for the bulls is to reclaim the $1,740 level to kickstart a broad altcoin rally. The broader altcoin space is riding Ethereum's coattails, getting a massive structural boost after institutional powerhouse Bitmine Immersion completed its largest ETH purchase of 2026, scooping up over 126,000 tokens. Institutional accumulation during a panic. You love to see it. Overall, the market mood is a cocktail of cautious optimism mixed with under-the-surface jitters. Today proved the dip buyers aren't dead, but the institutional money is playing it safe and tight ahead of the macro storms brewing later this week. Keep your eyes glued to the screen for existing home sales tomorrow, but the ultimate boss fight occurs on Wednesday morning with the May CPI inflation report. It's expected to tick up to 4.2%, and that number will dictate exactly what the Fed does next. Buckle up, trade safe, and we will see you tomorrow.